All right, welcome back. We're doing a deep dive today, and it's a fascinating one looking into Berkshire Hathaway's third quarter earnings for 2024. And we've got this, recent Morningstar report, which always gives some good perspective. Now, of course, Berkshire Hathaway,
Yeah.
led by the one and only Warren Buffett, legendary investor,
Yeah.
massive player, all that. But even with all that, these numbers,
Yeah.
they're pretty eye-popping. So Morningstar, uh, super respected in the investment research world, they've given Berkshire Hathaway a 3-star rating, which, suggests that it might be fairly valued. But is there more to the story?
There's always more to the story with Berkshire, isn't there?
Exactly. I mean, that's why we do these deep dives, right?
All right. Yeah.
Okay, so let's start with those top-line numbers. Total revenue, including investment gains and losses, it went up dramatically.
Wow.
Like a massive increase, 78.9% to $113.5 billion. So basically, almost an 80% increase.
Yeah, that's huge.
But here's where it gets a little interesting. If you strip away the investment gains and just focus on the operating revenue, it actually dipped a little, like 0.2%, down to $93.7 billion.
Wow. So that's a pretty stark contrast. It really highlights how much of their revenue is tied to, market performance. It's not just an operating company. It's a massive investment house.
Right, exactly. And that's a really good point because, it's easy to forget that when you're looking at these numbers. So let's look at the earnings now. Operating earnings, again, excluding those investment gains and losses, dipped by 6.2%, down to $10.1 billion. And Morningstar's pointing out that Hurricane Helene and some reassessments they had to do at their guard insurance companies kind of hurt their insurance underwriting results.
Natural disasters, unforeseen events, always going to have an impact on insurance.
Yeah, right, for sure. But here's the twist. When you factor those investment gains back in, their reported earnings, they actually soar up to a positive $26.3 billion. That's massive compared to last year where they were negative $12.8 billion.
Huge swing.
Really big difference.
Yeah, that really shows how much investment performance can really impact those reported earnings. But for a company like Berkshire, for long-term investors, it's really that underlying operating performance that matters.
Yeah, for sure. It's the long game. Speaking of which, let's talk about book value per share, because this is key for understanding Berkshire Hathaway's intrinsic value, right?
Yeah, absolutely. Book value is great for seeing how management's allocating capital and growing that company net worth over time.
Right. And this quarter, their book value per share increased by a healthy 6.7% from the previous quarter and a really strong 23% year over year. It hit $446,906 per share. And they say this was largely driven by, as you might expect, their insurance operations and that really powerful equity investment portfolio.
Yeah, they really do have a knack for making money work for them, their long-term investment approach, the way they navigate market fluctuations. It's pretty remarkable.
Yeah, they've been doing this for a long time, and they've got a pretty good track record. So let's dive into some of those interesting moves they made this quarter with their investment portfolio. They pulled in a cool $4.5 billion in pre-tax investment income. That's up 56.6% from last year. And big part of this, guess what?
I'm going to guess Treasury bills.
You got it. Their holdings in Treasury bills ballooned to $288 billion. So, what do you think that says about their view of the market?
Well, it definitely suggests they're being a little more cautious, wouldn't you say? Treasury bills, those are like the safe haven. They offer stability, especially when things are a bit uncertain.
Right. It's like battening down the hatches a little bit. Like maybe they see some storm clouds on the horizon.
Could be.
And then on top of that, they've also been trimming their stock holdings, especially some of those, big tech giants.
Oh, interesting. Which companies are we talking about?
Well, they slashed their stake in Apple by over 50%. And Bank of America by 25%. So overall, their stock portfolio shrank from $318.6 billion down to $271.7 billion. Or if you include their holdings in Occidental Petroleum and Kraft Heinz, it'd be $301.8 billion.
Those are big moves. It makes you wonder if they're maybe starting to question those, tech companies. The ones that have been doing so well, maybe they're not so sure about the long-term prospects anymore.
Yeah, exactly. It's definitely a shift. And here's the big one. They ended the quarter with a record-breaking $325.2 billion in cash and cash equivalents. That's up from $276.9 billion last quarter.
Wow, they're sitting on a mountain of cash.
A mountain of cash.
Yeah, that gives them so much flexibility. They could make acquisitions, invest in something new,
Right.
or even buy back their own shares if they wanted to.
Yeah, it puts them in a really powerful position. But here's the thing that really surprised me. For the first time since 2018, they didn't buy back any of their own stock this quarter. Like, this is the first time they haven't done that since Warren Buffett started that practice back in Q3 of 2018.
That's interesting. Well, remember, Morningstar mentioned that their stock price has been kind of hovering around that fair value estimate for most of the year.
Yeah.
And it even went above it in Q3. So maybe they're just not seeing it as such a good deal right now.
So they're holding back, not convinced it's the right time to buy.
Seems like it. Really shows their discipline, and how focused they are on finding those truly undervalued opportunities.
Yeah, it's pretty remarkable. So let's take a step back for a second and just kind of recap what we've seen so far. Mountain of cash, cautious approach to investments, especially with tech, and they're not buying back their own stock. So
Yeah.
what does it all mean?
That is the million-dollar question, isn't it? Is
Right.
it fear, opportunity? Maybe a little bit of both. I guess we'll have to dig a little deeper and see if we can figure it out.
Yeah. All right. Sounds good to me. We'll be right back to continue our deep dive into Berkshire Hathaway.
Thinking about all these numbers makes me think about one of Warren Buffett's most famous investment principles, that be fearful when others are greedy and greedy when others are fearful.
Oh, yeah. Classic Buffett.
Right. So looking at all this, all these moves Berkshire's making, makes you wonder, are they being fearful now?
That's a good question. I mean, all that cash. And shifting to treasury bills. It's definitely a cautious approach.
Right. Like they're getting ready for something.
Yeah, like battening down the hatches. Maybe they see something the rest of the market's missing.
Yeah, maybe they think the market's overvalued. And they're waiting for a correction before they, put that money to work.
That's possible, but
Yeah.
we also got to remember Berkshire Hathaway, they're in it for the long haul. They're not playing the short game. They want to invest in good businesses for the long term. So maybe it's not about fear. Maybe it's about patience.
Yeah, you're right. They're waiting for the right moment.
Yeah.
And with all that cash, they can jump on an opportunity when they see it.
Right. They're not just swinging for the fences. They're looking for those solid hits.
Exactly.
So maybe not fear, but discipline and strategic timing.
Right. And that discipline is, a big part of their success.
Yeah, absolutely. We talked about them stopping the stock buybacks, which seems like they don't think their stock is, a great deal right now. But how does that fit with the Morningstar rating, the 3 stars, which means it's fairly valued?
Well, that's a really important point. Fair value, it's an estimate. It's a snapshot. Morningstar might say it's fairly valued, but Warren Buffett and his team, they might see it differently.
So they might have higher standards for what they think is a good deal.
Exactly. They've always been very disciplined, very patient.
Makes sense. Let's talk more about their investment portfolio. You mentioned they were trimming some of those tech stocks like Apple and Bank of America. What do you think's behind that?
Tough to say for sure. We don't know what they're talking about behind closed doors. But a couple of things come to mind. Maybe they're taking profits. Apple and Bank of America have done really well, so maybe they're just, cashing in a bit.
Yeah, taking some chips off the table.
Right. Or another possibility, maybe they're not so sure about those valuations anymore.
Yeah.
Tech stocks, especially, have been really high. Maybe they're worried about a correction.
They're being a bit more cautious.
Yeah, maybe. It's also worth noting that they've been buying in other areas, like energy and financials.
Oh, interesting.
So not just selling, they're moving things around.
Yeah, finding the opportunities.
Exactly. It's a good reminder for all of us, diversification is important.
Absolutely. And speaking of diversification, they've been buying a lot of treasury bills.
Right.
What's the strategy there?
Well, treasury bills, they're super safe, backed by the U.S. government, so very low risk. When things are uncertain, investors like them. They preserve capital.
So they're parking the cash, waiting for a better opportunity.
Yeah, you could say that. It's also possible that they're using them to hedge against inflation.
Ah, that's a good point. Inflation is still a worry.
Right.
So it looks like they're preserving capital,
Right.
managing risk, and getting ready for the future.
Exactly. Really smart moves.
Yeah, very impressive. So how about we switch gears a little bit, move past the investments, and look at their operating businesses.
That's a great idea. Those businesses are really the core of their strength. They bring in steady cash flow, even when the market is, up and down.
Okay, so we're back and ready to keep going with our deep dive into Berkshire Hathaway. It's easy to get kind of caught up in all the excitement of their investments, right? All that cash, the stock sales, the treasury bills. But we can't forget about the other side of things, those operating businesses.
Right. Yeah, those are important. They're really the foundation of their success, bringing in steady earnings and cash flow, no matter what the market's doing.
Yeah, they've got a huge range of companies, right? Insurance, railroads, energy, utilities, manufacturing, retail.
Yeah, they're everywhere.
It's like a mini version of the whole American economy. So,
How are those businesses doing? Are they holding up okay with all the, economic uncertainty going on?
well, from the report, it looks like they are. I mean, even with things like Hurricane Helene hitting their insurance business, they're still making a profit. That diversification, having all those different businesses, it really helps them, gives them a lot of resilience.
Right. They're not all in on one thing. So
Yeah,
they've got this amazing portfolio of businesses and a ton of cash just waiting for the right opportunity.
exactly. It's a pretty powerful combination.
Yeah, it really is.
And it shows their long-term thinking. They're
Mm.
not just going for the quick buck, they're building something that can last.
Yeah, like Warren Buffett always says he likes to hold things forever.
Right, exactly.
He's not looking for a quick trade. He wants those companies that will just keep growing for years and years.
It's a good reminder for all of us, that real wealth, it takes time to build. It's about patience, discipline, and focusing on what something is really worth. Right, that intrinsic value. Berkshire Hathaway, they're like the poster child for that.
Absolutely. And it's something we can all learn from, whether you're managing millions or just starting out.
So, as we wrap up this deep dive, I'm feeling like even with all the uncertainty in the market, Berkshire Hathaway seems to be in a really good spot.
I think so too. They've got the financial strength, the right mix of businesses,
Yeah,
and great leadership. They're definitely a company to keep an eye on.
yeah, for sure. So, here's something to think about. What does all that cash they have and the changes they're making to their investments, what does that tell us about what they think is going to happen in the market? Are they seeing something we're not? Are they just being careful? Or are they getting ready for some big opportunity that's coming up? It's a good question to think about. So keep exploring, keep learning, and keep watching Berkshire Hathaway. That's all for this deep dive. See you next time.